Okay, I'd like to call the Finance and Taxation Committee meeting to order. Carol, do you have the roll call?
Taken.
Okay, any corrections or minutes?
None that I'm aware of.
Item C, business open, priority-based budgeting. We talked about this maybe a year ago. Phil had presented it to us, and at the time he did, we were a little reluctant to do it because of the cost. And we're going to revisit that tonight and look at a different cost for the same thing. Part of the concern is that we have high taxes and they're sneaking up again. And the only way we can maybe reduce taxes on our end is to reduce services. And if we reduce services, we have to have a good basis for doing that, or understanding why we may have changed how we dedicate our money to different projects. I use an example of snow plowing. You know, do we need to plow the snow if it's 2 inches? You know, sure, the first day we don't do it, there'll be a bike accident, a bus accident. But,
So for Lily, basically what this is just looking at our budget and determining which things are a priority on our budget and, you know, allocating funds to the ones that are and maybe reducing services or eliminating some services of the ones that aren't determined to be a priority.
and
Just want to give her a quick.
Yeah.
And actually, I'm going to do that too
Okay.
with this. Just kind of take a step back and remind everybody where this
Okay.
all came from and where we're hoping to go, or where I'd like to see us go. But then if there are any questions, definitely throughout, stop me. And then also at the end, there'll be a chance for questions too. Okay, so priority-based budgeting is what we're looking at here. Currently, the city of Monroe is one of the highest municipal tax rates in the state. And it's a couple pages in here, I think you'll see that. In 2015, the municipal tax rate for Monroe was $10.81, while the average for cities in Wisconsin was $8.40. So the villages and towns may be different, but the cities only, that's what the average was. And there's a sheet in there that'll show that, and we'll come back to it at the end again. Non-operating costs are increasing, and that puts pressure on the municipal levy for day-to-day services. We increased our debt service for 2017. Additionally, we're looking to increase the amount of levy towards capital expenditures to address deteriorating infrastructure. Albert Einstein's famous quote, "Insanity, doing the same thing over and over again and expecting different results." We need another approach to budgeting. So, what is priority-based budgeting? It is an analytical tool. Provides critical data for staff, elected officials, and the public. It works with the community's current budget process to provide costs and other information necessary to make difficult decisions for balancing the budget, as how we respond when, as you were suggesting, expenditure requests are greater than anticipated revenue, or our anticipated revenue is less than the revenue of the current year. So what we're expecting to get next year in our 2018 budget is going to be going down. But our expenditures will stay the same, if not go up. Priority-based budgeting also helps avoid 7 deadly sins of budgeting. Robbing Peter to pay Paul. For example, taking money from one fund to pay for another. Using accounting tricks. You know, some may say the
We don't do that.
well, not illegal.
No.
But you move stuff around and all of a sudden you have some freed up capital or funds. Borrowing, selling assets, make something up, and I think that means create something new. Nickel and diming employees, or delaying asset maintenance or replacement. And I think we've used one or many of these over the last years. Unfortunately, that is not sustainable. They are not sustainable solutions for long-term financial stability. And that's what we're seeing. So, priority-based budgeting characterizes what we spend in our external, community, and internal services. The external is what everybody sees. Those are the services like your snow plowing, your police force that are out patrolling streets, the election you hold. All of those things are going to be your community, your external services. However, they are also dependent on internal services, which you don't always see. Now that's going to be your elected officials, the payment you get for that. HR, finance, some of those things that all go into making the external services function.
So
I can
this
see
isn't really okay. never mind.
Well, what it does is, it still analyzes both of these.
Yeah,
Okay, so you don't want to have an overabundance on internal services if it's not having a positive effect.
yeah.
It will still measure the internal, but it does measure it a little bit differently. There's a little different results based on those
Okay.
things. Here's an example of our current budget view, and this is the one sheet that's separate. It's a blown up version of this, just because these numbers obviously are really small. The numbers themselves aren't important for this exercise, but here's an example of what we currently do. This is a page from the law enforcement section of our current budget. And you can see here, we've got about $1.9 million of salaries alone, and if you take all the personnel costs here, it adds up to just over $3 million. What are we getting for that $3 million? This is not what we're all getting necessarily here, but here is a list of 76 or 78 different services that may be what that $3 million is broken up into. So some of them up here, there's patrol several different ways. There's patrol response and operations, response to calls for service. Each of these things could be a separate service that's being provided by simply law enforcement alone.
How are these determined? Are these like the little codes that they use, or no, or?
These are the ones that we would have to set up, essentially. So
Okay.
we wouldn't necessarily set up all these codes to hit the budget differently.
Right, so they're not ones that we're currently doing now necessarily.
Correct. And we
Okay.
may be tracking some of them, and there may be some we need to separate even further.
No. Okay, because I saw like pet adoption services. in
Yeah,
there.
right.
I mean, that's obviously not one
Not
that-
something we're necessarily doing,
Right, yeah,
but there might be something else on there that's not on the list that we do offer.
yeah, got it.
But what that does then is we would take these, and we'll get into it just in a couple slides here too, a little bit more. Say we take, there's 20 of these different things that we're doing. We'll set up a spreadsheet that shows this and break each one of these into the personnel and non-personnel costs. They'll still track back to these line items, but they'll have a distinct code to help track that. So when we're looking at, say, dispatch, some section of this right here is going towards dispatch.
Yeah.
So now later we want to look at, okay, is dispatch an essential service? How does it score as something that we offer? We can now take a look at what does it actually cost us to do that service? What is it in personnel, non-personnel costs? So can we do it cheaper? Do we need to offer it at all? Are we getting any value? Is it a value-added service? Those are some of the questions we can start to ask by looking at this in a different lens.
Or maybe if it's something that we need to outsource or.
Possibly,
Yeah, okay.
right, we have an idea then, so garbage has been brought up
Yeah,
before.
yeah.
We'll now be able to look at, okay, what are all these parts of garbage that are there? And we can say, okay, well, recycling we can outsource, but garbage we want to keep in-house,
Mhm.
or whatever it might be. We'll have a better idea of what that is. So, we take all the information, and let's say there's 40 different things that we're doing, and we put in the personnel costs and the non-personnel costs. Then what we're gonna do is each of those different programs, we're gonna have scoring across some criteria, which will come up in a few seconds. This is what we would kind of end up with though. They're gonna be put into 4 sections, quartiles. And that's gonna be based off of the scoring, you know what a quartile is, 25, 25, 25, 25. And so many of the programs are gonna be here in Q1, the most important services that we have based on our scoring, and the dollar amount that's associated with that. So ideally, you wanna have this number low and this one higher. So this is a pretty good range here of what you would wanna see. And it's kinda, here's just some of the benefits that are identified by GFOA, the Government Finance Office Association. Transparency, it lets the citizens know what it is they're spending money on, what they're getting for it, so it helps break those things out. Trade-offs, you were talking before about making budgeting trade-offs or outsourcing, where you're going to the sourcing here, where you want to have those services provided. Workforce planning, we're going to talk about succession planning. Okay, well, maybe we sometimes forget about who's going to be responsible for service X when that person is gone. This will help identify FTEs that are equivalent to each of those categories there. So how does it work? And I'll go through this somewhat quickly just to keep us on track here. We want to know why we're in business. what do we do and what does it cost? And so we're gonna do that by determining results, identifying programs and services, creating a value for those programs based on results, and allocating the resources based on those priorities. So it's taking a look at what we're doing and how we're doing it, and flipping it on its head. I didn't do this slide, so. So the allocation of costs back into programs. What are the programs that we want to do? What do they cost? And then score the results. So when we look at these programs, how do they fit into what it is that we want to do for provide citizens as services?
Is the scoring, oh, here it is, okay.
Yeah. Okay.
So
So
all these things are what you scored on, and this is built into the program, or does you have some influence on this?
this is where the council comes into play here. So this is where this is the specific priority piece of it. There are 5 different areas that are part of the model. Any model, any community that does it, they would have these 5, and that's the percentage that's a mandate. So does it come from the state or federal government? Is it an internal by code? Is it a best practice? There's no reason, but it's something we've always done, so we keep doing it. You score from 0 to 4 based on that.
Is safety one of those?
Safety could be one. In fact, it's actually one of them that there's safe community there. There's the next slide I think actually talks about safety as an example. So here's just a few examples of some things that may be sustainable and maintained development. Culture and recreation, maybe the arts is something that we really value here in Monroe. Then we'd look to have that as an idea. So the Resource X, which is the spin-off company that we have here, they provide a search engine to help us identify definitions for values like safety. So what does safety mean? Well, there's a whole set of definitions for different communities and how they view safety. So we take those, come up with maybe 5 or 6, and here we've got safe community, and here's some definitions of what it means to have a safe community. That'll help us with establishing the scoring when we're looking at these things that are more, not as easy to define. Safety to you might be different than safety to me, than safety to Bridget, or Brooke. So this tries to help give us a better definition of what a 4 is to compare to a 2 or a 0. Here's another one, economic vitality as an example. So we take 4 or 5 besides the 5 we already have, and that would help with establishing what the scoring is. So here you go, 0 to 4. 3 or 4 is going to be the higher degree of relevance. 0, no clear connection. This you wouldn't necessarily see. This is kind of the back end stuff right here. So here is mandate to provide the program, cost recovery. Is it fully funded by taxes? Are there fees that help pay for it? You know, is it 100% paid for, 50% paid for? Is there a change in the demand for service? Is it increasing or decreasing? You know, the senior center, if we have an aging population, there'd be an increased demand on that versus the flip. Reliance on the city to provide service. And there's a 5th one too that this is an older model here that they have as an example. This community took these 5 priorities as their results. Safe city, prosperous economy, sustainable city, vibrant community, and well-maintained infrastructure. So then they score those. So what is this over here? That's the department. The program is business attraction and expansion assistance. And then those are the scores related to what they said for those. So those are all then totaled up and put into the quartiles. So they're baskets of programs according to score. To get a program score, we add all those up, and then you have your average, breaks it into quartiles. That's going to be your Q1 over here, 2, 3, and 4. These are the ones that aren't valued as high, the ones you want to try to eliminate over time or move over the other way. Resource X identifies programs offered by our city, and we can use the tool to evaluate how much we spend on those services. So here is like a Q1, and then we can dig down a little deeper and see how much of that is made up of all these. And Patrol Bureau here is $650,000 and 17.6 FTEs goes into patrol. Take this as an example. So maybe we need to start looking at what we're doing with patrol or pick any idea. So now why use Resource X to get to this? The goal of priority-based budgeting is to move resources away from the lower areas and try to increase the upper. Or if we're needing some other value, we need to look at reducing our overall, we can just look at reducing these, not necessarily adding on anything here, but just taking that savings, we'll say. They provide the critical data necessary to put more money towards what we value and less towards the programs that contribute least to the results. Additionally, they provide a framework identifying 5 common starting points or filters, and they call these policy questions. Now these are just kind of starters. We don't need to use these. These can be used on an individual basis. The elected officials will have access to all this information once it's plugged in. It can be used during a meeting, or it can be used individually just to ask questions. And maybe your question is something about how many highly mandated programs in the Administrative Services Department do we have any? What does that look like? Are we overfunding things that we don't need to be overfunding? You could also look at all these filters here. Maybe you don't want a question here, but you just want to look at certain departments and say mandated programs. And you can change this anywhere from 0 to 4. Any of these, you can do the same thing with. You can turn on multiple filters or turn them off. So you can always be asking yourself questions about how can the community be better in whatever area it is. There's over 150 communities currently using priority-based budgeting across the US and Canada. And I realize that's not a lot, but this is pretty much in its infancy here. There's 2 in Wisconsin currently. Marathon County came on, I believe, last year, and Washington County the year before that. There are a number of cities and villages that are also looking at priority-based budgeting. I've been on a couple of conference calls with them recently. Superior was just on with last week, and West Dallas, and then Winneconne has also been looking, they've been on one with them as well. The other benefit, this would be for all of us that are using this tool as well. They allow us to search, identify, and tap into a database of over 50,000 programs. Maybe there's something we're not even offering now, but you've thought about it. Keyword search, and you can be brought to somebody that's doing that. Then you have a resource, okay, well, I want to reach out to Longmont, Colorado to see what they're doing in terms of loss prevention. What are their policies there? Maybe they got some great policies and you want to look that up. So how could the city utilize this model in priority-based budgeting? Well, here's just a couple of examples. We talked about the reallocation of resources for better efficiency and increased support from the citizenry. Maybe it's just maintaining our current services, but we're also, assuming all else is equal, looking to increase our capital by $150,000 in 2018. Where's that $150,000 going to come from? Maybe it's to reduce the municipal tax levy for the city of Monroe. And again, assuming all else is equal, and this is that one page there with the tax rates. You're looking at getting, let's say, to $9.99 for the municipal tax rate, getting under $10. It's about an estimated $366,000 to reduce that levy. Now, mind you, that still keeps us in the top 25% of cities. But you're looking at $366,000, and if we're still looking at the capital increase, you're looking at a little over $500,000 we need to adjust. How do we do that? Where are we going to cut $500,000 out of the city budget? You know, law enforcement's going to fight for theirs. Parks and Rec are going to fight for theirs. Council chambers will be packed with anyone that